Good morning, everyone. This is Sonny. Here's my legal disclosure here. I need to share this with you because a lot of people, they don't go to the remarks. Stating that I'm not a financial advisor. The information contained in this video is for entertainment purposes only. Before investing, please consult a licensed professional. Okay, in reference to our balance, we're currently sitting at 24,749. Remember, these balances are going to change because of the options that we're in. They're going to go up and down. So we're still above that 24,000 that we started with, so we're doing fine. There's nothing wrong with it. Okay, before we go any further to our account positions, let's check out the market just for a few seconds here. As you can see, the market is down. What's helping our portfolio out is our positions. As you know, we got ET and we got CenturyLink. CenturyLink, has recovered a little bit from yesterday. At the closing, they decided to dip a little bit because the market went south yesterday. So our ET is doing fine. Remember, our position is at $7.50, not at $8. So it's coming down like I suspected it would. Let's get out of here. There was this one article I wanted to share with you guys that came out yesterday that turned the market bad. A gentleman came out, an advisor came out stating that we're going to be in a recession, and I think it was on Fast Money or one of those CNBC programs, saying that we're going to be in a recession for the next 18 months to 24 months or 2 years, a year and a half to 2 years. So we have to tread lightly in our accounts, whatever we do pick, and have a little bit of protection. That's why I'm doing these covered calls, because it's an option for you to save some of your appreciation that you built up in the stock value. You know what I'm saying? If the price is going down and you pick a share price, you pick a strike price that's a little bit above, but at least you get a little bit of premium while the stock's going down in your retirement account. It'll preserve some of that profit there for you. You know what I'm saying? Unless you get called away later on, which we're going to get called away at one of ours. Okay, so let's move on. Okay, our positions here. Okay. Our cash availables only around about 659 there, 660. So we're not doing any trading today. What we're doing is just going over what's going to happen this weekend and where we are. Currently, the only positions we have is ET and we have CenturyLink. Right now, CenturyLink we purchased the other day. We got a little bit higher than the price it is today. So it dropped down $110. But remember, we have a 10 call option. And this 10 call, it expires this coming week. So it'll close out the month for us. Now, so far, this option is worth $108.49. So when you have a down day, you can see, whereas your stock went down, your option premium went up. So we can actually buy back this option, and when the stock goes back up, we can also, when it goes back up to like closer to 10, we could turn around and sell the 10 call again and pick up more premium. You see what I'm saying? So there's ways of making money, but we're not going to trade excessively here. But I recommend to talk to a tax attorney on that. What I'm going to do is in the description is I'm going to put a couple of websites in there down below, and you guys can go ahead and look at the wash rules and the tax rules and some of that stuff. Do a little bit of research on your own if you're doing any of these type of investments outside your IRAs. Okay, so it's very critical that you understand on the onset of what your tax ramifications are going to be, or what impact it's going to have on you at the end of the year. Okay, and how it's going to be taxed, whether it's going to be short-term or long-term. We're doing short-term capital gains. All this stuff's going to be taxed short-term because we're not holding it for 1 year and 1 day. And when you do an option against a stock, it's basically like you're buying another stock. Okay, so that's how IRS kind of looks at it. So you got to be careful there because we're only going to be able to do short-term capital gains. And it depends on what your tax bracket is. Okay, enough about taxes. I'm not a tax professional, like I stated in the disclosure. Please read below on all my disclosures and everything. And let's get busy here. All right, again, here's my positions. ET, we got 2,000 shares here. They're currently, we're up 11.43% at $1,660. As you know, CenturyLink here, it dipped a little bit down to 110, but we're not worried about it. And here is all our options. We got a 7 call that's going to expire this weekend. Actually, it's going to be Saturday at noontime. It's going to expire. So what's going to happen is this will go away. On Monday, we probably won't see this whatsoever on our chart here. We're going to collect, I'll bring up the other spreadsheet, but we're going to collect our money over there, and we're going to move on from that. We're just going to keep maintain that 1,000 shares. The other 1,000 shares, we're going to have to make a decision at what we want to do because it's close to that $8 mark. And remember, this is we only have a 750 call against it. So if we don't take any action by next Friday, this option or this stock will be called away, just like the 1,000 shares are going to be called away this weekend. Okay, and we already discussed why we want this stuff to be called away. All right, so we covered this sheet. There's nothing else for us to do here. These numbers are going to go up and down. The market's open. Even though the market's down, if these prices go down, it's okay. Because remember, our options at $10. Oh, one other thing. This weekend, actually 2 days ago, a CenturyLink CEO came out and stated they're going to pay dividends at the end. With the record date, and not with the record date, but the ex-dividend date is going to be the 29th. Well, guess when our option expires? The 29th. That means we just have to have the stock 1 day before, and we're going to get paid 25 cents. Now, we have 1,000 shares, so we're going to get paid $250. $250. If this thing gets called away on Friday, or on Saturday, if it goes above the $10 strike price, we're still going to get the $250. But we have to wait, a couple of weeks before they pay us into our account. But we're going to get paid $250, plus we're going to be able to keep our the premium that we received, okay? And we get to keep the difference between our purchase price and the $10 call price if this thing gets pulled away. So let's go to our other chart to discuss this further. We're going to be losing this position right here coming up this weekend. We'll pick up our profits of 2.3% on the trade. Remember, we went into the trade on 5/13, and we're going to exit the trade on 5/22. So we're going to let this get called away at $7. Remember, we sold a $7 call option against the ET's stock of 1,000 shares, which is 10 options. Remember, each option equals 100 shares. So we did that kind of in the money. The premium is $274, but the actual realized profit is going to be $164 of the trade. So 164 is going to be in this box right here at the settlement, which will be Monday, and so for Monday's report. Now, as you know, once we're out of this position here, we're going to need something else to fill it. So we can capture, 1 or 2%. I'd rather be on the 2% side every 2 weeks. So I want to capture about 3% a month if we can do it. 3% is okay with me. So the only 2 positions we'll be in is the ET. We'll have 10 positions. Currently, right now, ET is trading at $8 a share. So therefore, it's 50 cents above the 750. But we have until the 29th of May to make a determination if we want to roll this puppy over or just collect the 2.43. Now, if this gets called away, we'll receive 3.63% return on the trade. Our stock would be sold at $7.50 at the strike price a share. That means our cover would be $7,500. Our settlement off of that trade would be $90. The premium that we received here would be 0 here. We get to keep the premium. That'd be $194. So then together, all this action that we performed, we pick up $269 as a profit. Now, in saying this, think about this, guys. Remember, our CDs were only paying us 3.5%. So I did some actions here, but still, if you look at it, we took $7,410, pretty much May 1st here. I mean, a couple days before May 1st. And then we get called away at the end of the 29th of May. Let's say it's 1 month, because May has 31 days in it too. So in 1 month, we picked up $269, and we received a 3.63% in 1 month. That's achieving my 3% a month. Really, my objective is to achieve 10% a year. But I received that, I'm going to receive that within 1 month. more than I would have received by the end of the year if I would have had a 3.5% return from a CD. So, I mean, if we can get 3% a month, my God, folks, this is perfect. You know? Look at what we're doing over here. We're collecting, within 10 days, we're collecting 2.24%. If we do those trades every 10 days and collecting 2.24%, that's over 6%. Shoot, that's almost 7%. You know? So there's ways that we can beat those CD rates. And remember, the S&P over time, they get between 8 to 10% a year. I mean, some years it's up, some years it's down. You know? If we watch what we do each month and be methodical about this, we can grow these accounts. And the key thing is in your IRA, okay, we're going to do a little bit of swing trading, but I'm looking at an option that might be able to pull us an extra $110 for next week. But I have to do another trade in order to do that today, or I'm going to have to do it Monday. What I was thinking about doing is getting the 29 May, the same week, but it's an $8 call. Okay? All right, let me see what I can do here. Hold on. Here's ET. As you can see here, it's trading down to an $8 mark. I knew it was going to come down. I just knew it was too high flyer out there. And it might come all the way down to $7.50. So on Monday, I'm going to look at it again. And if it does come down to $7.50, I'm not going to take no action. But on Monday, if we're still hovering around this $8 mark, I'm going to look at a possible changing of the option. I'm not worried about the 22 because we got a 29 option. Okay, right now, the option that we're in is currently going for somewhere around 58 and 59. That's where the option is for this right now. If we wanted to close out our position right this minute, it's not 62, that was the last, but it was 58, between 58 and 59 to close out the position. Now we're already receiving almost 20 cents per position. So we would be out 29 cents, but we'd be jumping up to an $8 strike price instead of giving the house away at $7.50 each. We're giving the houses away at $8, so we'd be getting an extra $50 if this got called away. You see what I'm saying? And then we'd pick up another between 23 to 25 cents. I would try to get the 25 cents as much as possible. So if you took the 20 cents or so that we already received as a premium at the 750 level, and you add the 25 cents in, that put us at around 45 cents. So really, we're only 18 cents out. 13 cents out. Excuse me, 13 cents. 13 cents, but we're collecting 50 cents in between the two. Because of the value of the stock, the house will go up. Instead of $7.50, it'd be worth $8 for the house. So you see the profit in there of performing this action. As long as we don't dip below $8 on the 29th, we're okay. Basically, we made our money. And we get to still keep the stock. Excuse me. And we still get to keep the position. We just keep this premium, and then we roll over for another 2 weeks. See, remember our objective was to roll this over every 2 weeks. And because the price has went above our 750, we might have to make a choice if we want to keep it or just let it get called away, or to roll it up a little bit and pick up maybe an extra $200. I figure we can pick up an extra $200 on this trade. You know, maybe 150, depends on when we do this trade. Because remember, every day these prices go down. Okay, I mean, the options, they become worthless, especially if they're at the money. All these, you see all these options, they were like at 5 cents, 6 cents, and now they're at like 1 penny, 2 penny, okay? They all lost value. So all these people that took all these positions, if they're praying for it to go up, well, it didn't go up. So they're losing money. Or these guys are betting on this thing to go up past these marks by next Friday. That's what they're betting on. That's why they're paying these pennies and 2 pennies. They're betting on this thing to go up past $9.50 strike prices. A lot of people, they do that. They pick up the pennies. They buy the pennies to go long. You know, but with this market right now, you know, with the advisors are coming out saying that it's going to take us 18 months to 2 years to recover from this recession that we're in. You know, we're going to have some dips in this market because the market is really, really high. But I still think that an $8 strike price is better than this $7.50 for us to pick up maybe an extra $100 to $200 by next week, by next Friday. Now, if you're in a taxable account, now that's going to be capital gains tax, short-term capital gains. And the loss that we're going to take, the difference between this price and, you know, and the premium that we received, we can't take a loss at that because we're moving into another position. So the wash rule, so any of the losses that we took by moving on up, you know, you got to consult your tax advisor. That's why I recommend doing cover calls in your IRA accounts as much as possible. Because this is a frequent trade. Because I've traded this thing multiple times now. The same stock, okay, the same asset. So only to get the right premium. I basically was chasing the stock, what I was doing on this first one here, because I really like ET. Now what I could do is just let it get called away at the 750 and not worry about it, and then pick it up later when it drops or whatever within our price point, and take a new position and put some more options against it. Because remember, dividends only come out every quarter. Now this type of stock here, remember, you can't have it in your retirement account because it's a limited partnership, because it's taxed differently than regular dividends. Okay, we covered that in the previous slides. Okay, so that's a decision I'm going to have to try to come up with over the weekend. I'm not going to take no action today. You know, I don't spend much time doing this stuff. I'll check it out over the weekend, see what happens with the price point, and any action that I take, I'll do it Monday morning. It's still down a little bit. It might turn back north again. Looks like ET jumped back up to 812. So that time period at the $8 mark has changed. But I'll figure it out if I want to take any action against it, or we'll just pick up our, our our almost 4% on the trade already. So, we might not mess with it at all, and then we might pick another stock. Around 35. Let's look at the full screen of ET here. Look at the dip there. Shoot. If we would have picked it up then, that'd be great. We got paid our dividend. Yeah. So I think because there's a lot of green here, it's going to go up. It might even be close to $9 by the time the 29th comes up. We might, on Monday, I'm hoping it's another down day, maybe put some pressure on the stocks so we can make a decision at $8 before it pops back up. But if the market drops a lot, then we're going back down here in these areas here, which we should just stay the course and just wait until Friday. So we'll see what the price is looking like over the weekend there after the close today, and I'll figure out what I want to do. But there is a lot of green here, and when you see a lot of green, it means basically this thing wants to take off. Okay, please read my disclaimers below. Y'all take care and have a safe day. This is Sonny out.